Hey everyone, welcome back to AskAVC. My name is Ryan Floyd. I'm a partner at Storm Ventures. In today's episode, we're going to do something a little bit different. The team at European VC, Andreas and Dave, did a podcast with me talking about a variety of different topics, go to market, how to break into VC. And I thought it would be great to share that with you all, especially given that Storm's doing so much in Europe. Please leave me a comment, hit the subscribe button, let me know what you'd like to hear from more in the future. And I hope you enjoy. Thanks. Clearly, as an investor, you spend a lot of time giving, advice and opinions about things, hopefully based on a lot of experience that you've had, which is what has enabled one to have raised money and to be, given the privilege and responsibility of allocating the capital. The job, though, of an investor is it's not to invest. The job of an investor is to generate a return for their limited partners. So, advice is not part of the job description per se. I mean, it is to the extent that it, helps an investor drive a return. But for me, I have a bunch of individuals and pension funds who are stewards of capital for, employees and other groups that have entrusted money to me in order to meet the requirements they have for their own organizations. And I feel a tremendous amount of responsibility to deliver returns back to my investors over time. And so it's a different mentality a bit, rather than, my job as an advisor. I don't see my job as an advisor. I see my job as, generating returns for my investors. And part of the way I do that potentially is giving advice and working very close with startups. In terms of breaking into venture, it's not an easy question to answer, because just from the standpoint of there's so many different paths to do it. There's not one path to go down. There's lots of different ways. I think one of the easiest things to do, if you don't have, I guess, taking a step back, the first question I'd ask is whether someone has capital or not. Like, do they have any of their own means to invest or not? If they do have a means to invest, and I'm not talking about big dollars, even if it's 5,000, 10,000, I mean, it's relatively small dollars. There's lots of ways for them to start kind of angel investing and building a portfolio and starting to build out their network of people that they know and generating opportunities for themselves to invest. That's a good place to sort of start with venture, because it gives you very quickly that appreciation of what it means to be an investor, where it really gets real with dollars versus just giving advice, which none of your money is really at stake. To the extent people don't have dollars to invest on their own, there's lots that don't. I think really focusing on building out your network and really thinking about where is it that you can really hopefully find great opportunities that may not be obvious to everyone else. Maybe it's based on your background in terms of what you've done from an industry standpoint, that you've been very deep in a particular area in tech. Or maybe it's a particular community that you've come out of that, you think there's a lot of potential for opportunities there. And that could be everything from, a business school, kind of university environment to, maybe it's, community of color where you can, get those underrepresented founders more visibility and support them getting funded. Finding some things where you can do something to really show a potential venture firm that you're going to be able to generate great opportunities. That's probably a good place to start.
Let me. You kind of touched on the kind of the fiduciary duty there. So the privilege, but also the responsibility of managing someone else's money. And what's your take on the skill set needed so that it's not overwhelming, right? So what is the skill set that you need to be empowered as a venture investor to be able to actually fulfill that duty that you have?
Well, I think you have to have, obviously, confidence that you can generate a return. I mean, you have to have confidence that whatever strategy you're pursuing as an investor, you believe that you're going to be able to reasonably deliver returns over time. There's no guarantees. I mean, there's, there's lots of great investors that have ultimately gone on to lose money for their LPs. And obviously every investment that you make doesn't work out fabulously well. We've been fortunate at Storm that, every one of our funds over the last, 20 years has been profitable, and most of our funds now are 3x net or better. But that's not to say that that's always going to be the case. Something may not go as, we hope. And so we have to continue to sort of work at it, day in, day out, to make sure that we can continue to follow a strategy that we feel confident can, deliver returns. I guess the most important thing is just going back to what I said about, accountability and feeling that stewardship for LP's money, and realizing that, your job is it's not an investor, it's not an advisor. It is very simply put, it's to generate a return for your LP. And if people are not in the game for that, then it's not the right role for them. And they shouldn't be taking anybody's money. And there's lots of great investors that are not interested in being stewards for other people's capital. And then, and maybe they're just investing out of their own account. And that allows them then to do lots of things, risky things. They can invest in whatever they want, because it's their own dollars. So they don't really need to be accountable to anybody else. Anyway, it's probably a longer conversation, but that's how I would begin to think about it.
No, but I think it's very interesting, also because you most often hear in the popular media about the value add of a VC investor, and the value add, of course, being advice and all the other things that the VC brings. But here you're saying that you have to put that fiduciary duty first, and that is then your way of attaining that is, of course, creating a value add for the startups. But you seem to put it very much as a secondary thing. Am I right in?
Well, I put it's at the risk of stating the obvious about being, a steward for other people's capital kind of comes first. But certainly in terms of a skill set of what makes a great investor, I think being able to contribute to the success of a business is definitely part of that equation. No question. I mean, I think there's other things that are equally important. The ability to generate great opportunities, the abilities to pick which opportunities to invest in are probably equally as important to, being able to contribute value add after the investment. I mean, you don't have to look any further than, let's say, a seed investor that was the first investor into Uber or something, right? How much value necessarily did they add? How important was the value contributing to that equation in terms of how much money was made in that investment relative to being a part of the deal flow and selecting that investment? I mean, those two things, selecting investment and seeing that opportunity, it'd be hard to argue those aren't just as important as the ability to contribute value. And that's not to say maybe they weren't valuable to the team early on, but certainly being able to pick it and seeing it in the first place was pretty critical.
Yeah. Ryan, I have a question, because I'd say you said that for an advisor or anyone wanting to get into VC and start investing, if you just have $5,000 or $10,000, then that's actually enough. I'd say in the US, yes, you have very strong syndicates for the very early stage. You're really good at that. Unfortunately, we're not in Europe. So at least my experience is that getting into VC or getting into investing as an angel requires a lot more than 5,000 or 10,000 euros in a Danish context. So if you would view or take the view that the opportunity of being in these deals in a large syndicate isn't there, what would you say would be the path for people to pursue then? Do you have any reflections on that?
And with the goal being eventually to working in venture?
Right. Yeah.
Breaking into venture. So create a kind of shadow portfolio. Companies that you want to be an investor in, but you don't have the capital to be an investor in, and why you want to be an investor in those businesses. What's your investment thesis around it, and and why? What supports that logic of wanting to be an investor there? Generally for most people, honestly, I would say angel investing is probably a pretty good way to lose a lot of money. Yeah. It's very difficult, I think, to be investing small amounts of money as an angel and generate, great returns. I think, most great angel investors found success because they invested in a lot of companies. And they only need a few of them then to turn out to be successful, but they have to invest in many to get that result. And so I think just investing selectively can be a pretty tricky way to do it. And so, like I said, so building a portfolio of companies you'd want to be involved in, looking at even public companies and thinking about what drives success of those businesses. I think writing blog posts or, putting out content about, different businesses and why you're interested in this one versus this one. And, putting yourself out there around trying to be thoughtful about where these companies are going and why and what drives you to believe one will be successful versus another. Because at the end of the day, that's really what ought to underpin any investment to begin with anyway. And so, if you don't have capital and maybe you don't have access, that would be a good way to start. And certainly from a partner standpoint at my firm, I'm less interested maybe in junior people having invested actually in companies, and I'm more interested in what's their thought process. Can they think through what an investment ought to look like? Can they look at a new area and really analyze what makes for a potentially great opportunity in that area? Is the market large enough? Can they think through all of those different components on their own? That's what could make, a really good entry point, I would imagine, at virtually every single venture firm out there.
I love that tip, Ryan. I want to double down on it. So building a shadow portfolio and really, putting out there the way you think, what is your thesis behind it, and maybe even producing content on that. So I just wanted to repeat it so our listeners retain it, because I think it's a really cool tip that we don't hear that often. Let me maybe ask a provocative question here, which is we've actually had some interesting conversations with investors, venture investors, advising for more operators as investors, that we need that in Europe. And we've been talking about the role from advisor to venture investor and not from operator to venture investor. So can you just share some reflections on these two routes into venture and what is needed for the industry to keep on moving forward?
So let me make sure I understand the question. So you mean what makes like a great venture investor going from an operator to a venture investor?
Yeah, and your thoughts about, operator turned investor versus advisor or non-operator turned investor. Just kind of hear your thoughts and reflections about that.
Yeah, well, I think you'll find every operator will say that the best way to be a venture investor is to have been an operator. Just like you'll find everybody that's gone to business school will tell you the best way to be successful in venture is to go to business school. Most will. I think it's people will have a bias to what they know, and it's genuine and it's authentic. I think the reality when you look at venture, the people that have been successful come from a lot of different backgrounds, and just having been an operator certainly does not drive success. Absolutely not. You can think of lots of examples, like Mike Moritz at Sequoia came out of it. He was a journalist, right? Before jumping in at Sequoia. So I think it probably matters less about what it is that you did and matters more about what that skill set is you bring into venture. One of the pitfalls just on the operator side, which I'd probably put myself in that category, I came out of an operating background at an optics company 20 years ago and jumped into venture. I think one of the dangers as an operator is, you think that you can influence a lot more often than you actually can. Because as an operator, you're in the business, you can help make other people successful, you're all kind of working as a team, but you quickly realize once you're on the other side as an investor, you're kind of on the outside looking in. Some people use the analogy, you're on the sidelines of the game, yelling, screaming from the sidelines, and cheering sometimes and, crying at other times, but you're not, on the field, playing. Yeah. And that's a tough transition for a lot of operators because, you're used to being able to really impact outcomes. And what does that mean? Maybe you are able to, you'll select teams that maybe aren't as high quality or that don't have all the ingredients for success, thing that you can compensate for them as an investor. And generally it's pretty hard to do that. So I can come from, from lots of different backgrounds. What really matters, I think, is your ability to generate opportunities, right? So the network, are you really plugged into tech? And that's going to, your ability to diligence opportunities, your ability to hire and recruit executives, your ability to introduce new potential advisors, partnerships, your understanding of the broader ecosystem. All of that contributes a lot to success. So, if you're an operator, that's great, but do you have those other things? So also, if, let's say, you came out of some other background, if you don't have an appreciation for what it takes to operate a business, it's going to be probably pretty challenging too, because it's going to lead you to not really understand maybe what takes a long time, or what particular challenges lie around the corner, or why something isn't working, which will enable you to ask, the right question. So it takes a mix of skill sets. And, I think over time, venture and being an investor it's a thing unto itself, that, people will, grow stronger over time. Hopefully they will have made a lot of great investments, and you'll begin to, compensate for your own weaknesses based on, your background that you came from.
Right, Ryan, I have a question that goes to you actually being a founding partner of Storm Ventures, and that's of course it's a long time ago now, but we're seeing concepts like proof of concept funds, very small funds, being the way for emerging managers to break into venture. Do you have any views on that, and maybe contrast that to how you did it in the old days?
Yeah, it does feel like the old days now. I feel like a dinosaur. I mean, who has the same job for 25 years? Nobody. Look, I think let me just first say, all the innovation that's happening in venture, I think it's awesome. It's really great, because I think it's enabling a lot of people to get involved in venture and investing that couldn't, or would have been really hard for them to be involved 20 years ago. Whether it's unrepresented founders, it's just different countries. I mean, take Europe even, right? I mean, in terms of what's happened there, the blossoming of opportunities in Europe over the last 5 years, 10 years, it's just been amazing. And that's a lot because access to capital, I think, has just gotten easier. So I think all of that is good. Whether my advice to someone trying to break into venture, I don't think you have to go raise a proof of concept fund. But certainly that's one thing to kind of, sure, that's something you can go do. I think that's going to probably skew to doing seed investing, pre-revenue, because it's hard to have a proof of concept fund that's going to be large enough to do, A round or, B round or C, later stage investing. So I'd say it kind of depends what you want to do. There's lots of opportunities at later stages as well, which can be really exciting. Just as there are at the very early stages. So, kind of depends, I guess, ultimately what, gets that person excited. But I think all the innovation is fantastic, and it's really made us all as venture investors better.